Gold's current bull run is expected to continue gaining momentum throughout the year, and we've seen a number of optimistic forecasts. With gold reaching all-time highs earlier in the year, we are in the midst of history being made. But investors always want to know, can it go higher? By how much? And when? The current bull market for gold has some legs. Since 2020, the lowest we've seen gold pull back to was just over $1,600 an ounce, and today's current pricing, around $2,300 an ounce, means some gold investors are enjoying gains over 40%. And the current rally has strong fundamentals that indicate gold could go much, much higher. We're seeing forecasters and analysts enthusiastically calling for gold to hit $3,000 by year's end, and some speculators are going even further, calling for gold to reach $5,000 within the next year or two. We've always tried to shoot straight with our audiences. At the start of October last year, we released a video titled Gold to 2300, Not So Fast. That gave an overview of the current forecasts, the track record of forecasters, and our assessment on gold reaching 2300 by year's end. And in that video, we were able to show that historically we had about a 3% chance of reaching 2300 per troy ounce by the time the new year rolled in, and we called it unlikely based on the time frame available. It wasn't until April of 2024 that we passed 2300 per ounce. So investors want to know today, are the forecasts of gold at $3,000 an ounce by year's end realistic? Here's the deal. To get to $3,000 an ounce, we need gold to rise by an additional 30% in just under 6 months. Impossible? No. But just like our prior video, we think it's safe to say the odds are long. When examining price data, we looked for the steepest slopes to find the fastest periods of price accumulation for gold. In other words, we looked at the most recent periods where gold shot up like a rocket and measured the change in price in 6-month increments. We also looked at the number of times where gold was at least 30% higher after 6 months, going back to 1978. Again, a 30% increase from today's spot price would put gold at $3,000 per ounce. We measured this a couple of different ways, and the end result is that we're looking at odds of about 2.5% to 3% to hit $3,000 by end of the year when we look at historical average prices and price movements. This type of analysis isn't perfect, but it's suitable for our purposes today. In the most recent examples we could find, if we cherry-pick the low points and measure against the high points, the data doesn't look much better for our most optimistic gold bugs. We had periods of rapid price growth a few times in the last 10 years, and when we sorted through them, we found there was a median increase of 24%, with the highest gold price growth reading 34% between February 2020 and August 2020. Obviously, a global pandemic influenced gold buying during that period, so it might be a little unfair to ask gold for a repeat performance. If we assumed a rapid increase in gold spot prices over the next 6 months hitting a median 24%, gold could end the year around $2,850. That's still a rosy forecast for people who are holding gold, and that scenario does require some catalysts. The recent gold rally has been sustained by a few things. Robust central bank gold buying and expectations of interest rate cuts from the Federal Reserve are two of the most important elements. Let's talk about those for a moment. Recently, the People's Bank of China balked at high gold prices and paused gold purchases in May after a record 18-month buying spree. We don't think this is the end of China's gold buying ambitions, but rather a pause. China is one of the foremost leaders in the de-dollarization trend, and they need to offload their treasuries and invest in another stable asset. Gold is the natural and logical choice for them, rather than moving to another debt instrument. It is evidence, however, the PBOC might be somewhat price sensitive to gold in the current environment, and that could slow future growth as gold continues to reach new highs. And as for rate cuts, the FOMC meeting on June 12th unveiled a new dot plot with projected rate cuts for 2024 being reduced to 1. Some optimists are saying as many as 2, but Powell was clear in the following press conference the board intends to approach rate cuts conservatively and err on the side of caution. The major concern is that cutting rates too soon could impair their ability to reach the Fed's 2% inflation goal. He did leave the door open for further cuts in the event of substantial changes in the labor market. Overall, however, the latest FOMC meeting puts a little bit of a damper on the potential for a $3,000 per troy ounce price tag on gold by the end of 2024. If anything, the hawkish tone may serve to moderate gold's price growth for the remainder of the year. Any unexpected news about interest rate cuts coming our way, or the PBOC resuming gold buying, would likely be a catalyst for gold. Absent those two, another event would need to occur to jumpstart another rally that eventually leads to $3,000 gold. This does not mean we think 3,000 is impossible or even unlikely in the midterm. The fundamentals exist for gold to rally to 3,000, just perhaps not by the end of the year. So the final verdict is not impossible, but not likely. There are no obvious signs pointing to a massive increase in 6 months on the horizon, but there is a bright spot for the hopefuls among us. It's often the unexpected moments in history that result in the biggest changes. That's all we have for you today. Please remember to like, subscribe, and share with a friend. Thanks for watching, and we'll see you next time.